In this video, we're going to talk about the state income tax refunds, specifically Massachusetts state income tax refunds that may or may not contain a refund for the circuit breaker credit. Let's go through an explanation of why state tax refunds might or may not be taxed in the following year when they're actually received by the taxpayer. So we'll go through this step by step. In a prior year, the taxpayer would have paid an expense, and that expense being the state income tax. And he would have deducted that expense on his Schedule A, and therefore his taxes were reduced because he received that deduction on his Schedule A. And in the current year, he received a partial refund of that expense. So then, the partial refund received in the tax is taxable in the current year only up to the amount of the itemized deduction that reduced his taxes in the prior year. So you might want to go through this in your own mind, step by step, and understand this, because this is really key to the taxation of the refund as it's received in the following calendar year. Where do you look for the state tax refund? Well, first of all, we're going to look at the intake booklet that we received from the taxpayer, and we're going to see in Part 3 that we have income last year. Did you or your spouse receive a refund of state and local income taxes, Form 1099-G? And that's either going to be checked yes or unsure or possibly no. But if it's unsure, we need to confirm that they did or did not receive that refund. And we're also going to look in their paperwork for Form 1099-G, state or local income tax refund. We also want to make sure that we have last year's return because we need to see that there was a state overpayment, also known as the state tax refund, showing on that prior year tax return. We're also going to need to look at the federal tax return from the prior year to see whether there's itemized deductions for real estate tax and or state income tax on their Schedule A. State refund. If a taxpayer receives a state refund in 2019 from a 2018 tax return, does it count as a taxable income for 2019? This is the question. The answer is that it depends. And that's why the whole taxation of state refunds becomes a rather complicated issue. And we're going to go through all of that and do some examples of it as well. Is the state tax refund taxable? Well, taxpayer used the standard deduction last year. This is a little quiz. Taxpayer used the standard deduction last year. Is the state tax refund taxable? The answer is no. Because they used the standard deduction, they needed to use the itemized deductions in order for it to be taxable. So if they did use the itemized deductions last year, is it taxable? And the answer is maybe. Maybe parts of it are taxable, maybe not all of it, maybe all of it. We'll see. Taxpayer does not have the Form 1099-G. Well, then maybe it's still taxable, even though they don't have a 1099-G. Taxpayer itemized last year. They used the sales tax deduction rather than the income tax, the state income tax deduction. Is that taxable? No. So we will see, however, that there are situations where they're still going to have to pay tax, even though they use the sales tax deduction rather than the income tax deduction. And that comes in a future bullet. They use the income tax deduction rather than the sales tax deduction. Well, maybe. Maybe there are parts of that that need to be taxed as well. Now this one here, if the taxpayer qualified for the Massachusetts Senior Circuit Breaker credit last year, would that Senior Circuit Breaker part of the refund be taxable in the current year? The answer is maybe. Maybe all of it, maybe part of it.
So under what circumstances would the state tax refund not be taxable? Well, some of these are very clear right from the start, and so we can make that determination very quickly that if there was no tax benefit in the prior year, then there would be no taxation of the refund in the current year. So if in the prior year the standard deduction was used, then the refund would not be taxable. If in the prior year sales tax was deducted rather than the state income tax, and there was no Massachusetts circuit breaker credit claim during that year, then again, the refund would not be taxable. The taxable income plus refund is less than zero. So if taxable income on the tax return plus the refund is less than zero in the prior year, then the state tax refund in the current year would not be taxable. If there's no tax benefit in the prior year, then it's very simple. We do not enter the refund in TaxSlayer at all. We basically ignore it. It is a good idea to make a note in the intake booklet indicating that it was not taxable and giving a little reason for that decision. If there was a tax benefit in the prior year, then we need information from the prior year tax return in order to determine how much of the current year's state tax refund is taxable. Now, all other years for Tax-Aide purposes are out of scope unless the taxpayer agrees to accept being 100% taxable. So in other words, they accept the fact that their state tax refund is going to be 100% taxable, then we'll go ahead and do a 2016 or a 2017 tax return for them. Taxpayer claimed standard deduction for all years. So if they had been using the standard deduction all along, then we don't have to worry about the state tax refund being taxable at all. And also, same is true if they claimed the sales tax deduction for all years and there was no Massachusetts circuit breaker credit used during those years, then it would also still not be taxable. So we could go back and do a 2016 or 2017. So we have calculation worksheets that we have to deal with in order to determine how much is taxable on the refund. So here are some of the options we have. We have the TaxSlayer State and Local Refund Worksheet, which we can also find described in Publication 4012 under Tab D. And that gives us a little bit of a tutorial on how to use the TaxSlayer State and Local Refund Worksheet. The Bogart Refund Calculator is at Bogart's URL, and you can see that listed here on the slide. And you can get to his calculator, which again, if you know anything about Jeff Bogart and his calculators, he does a fine job on those. So very, very useful tool. And then we also have the Mass Special Circuit Breaker Treatment Worksheet, which is something that is basically a paper worksheet that you would need to print out and just basically scribble in the answers to the questions, and then that plays in conjunction with the Bogart calculator to come up with a final answer. So you can see the URL here as going to the masstaxaide.org website, and you can find that worksheet under Reference Materials and Tools. So if there's a circuit breaker refund that's mixed in with the state tax refund, then you need to print that tool out and use that in conjunction with the Bogart tool. Income tax versus sales tax. So when you're looking at the prior year's tax return, you look at Schedule A, line 5, and you can always use this rule. The taxable amount of the state tax refund is never more than the income tax deduction claimed minus the sales tax deduction that could have been claimed. So again, the taxable amount of the refund is never more than the income tax deduction claimed on the prior year return minus the sales tax deduction that could have been claimed on the prior year return. So that's always a good rule of thumb to pay some attention to. Calculating the preceding year's sales tax. All right, let's look at this. Publication 4012 Tab F gives you a little tutorial on doing this. You begin with the 2018 AGI, so the prior year AGI from Form 1040 is where you start. To that, you add income not taxed, such as non-taxable Social Security, SSI, VA benefits, the non-taxable portion of pensions have to be added back in as well. So you can use the general sales tax deduction income worksheet also on that tab F to determine what are these key elements that you need to add back to the AGI in order to come up with the preceding year's sales tax deduction. Use the sales tax deduction calculator at irs.gov to determine the state and local taxes for the preceding year. So if in the preceding year the taxpayer had used state income tax as the deduction, then you would need to go back and calculate what they would have received for a sales tax deduction if they had used the sales tax instead of the income tax. And the IRS gives you a nice little tool, and we'll see that in the Bogart calculator, that tool is accessible from within the Bogart calculator, so you don't really have to go hunting for it. And you input the result into the state refund worksheet in TaxSlayer for the current year. So you pull this information from the prior year, you input it into the taxpayer's tax return for the current year in order to determine how much of the state tax refund is taxable in the current year. State tax refund worksheets, again, we're talking about what's the most common error is that you forget to input the sales tax that could have been deducted in the prior year, because it's not readily available, it's not readily seen, especially if the taxpayer in the prior year had used income tax instead of the sales tax. There's nothing in the prior year return that's going to tell you what that amount is, what amount he could have used. So we have to calculate it, unfortunately. It takes a couple of minutes, but that's what needs to be done in order to get the right numbers here. So new for 2019, the state tax deduction may have been capped, because we know that in 2019 there is a cap of $10,000 for all of the state taxes combined. That would be the state income tax, the sales tax, and the state property tax. All of those things combined are maxed out at $10,000. So we have to be careful of that for 2019 and beyond. More likely, the refund is not taxable because of that cap. And we need to remember the limitation when using the worksheet or the Bogart calculator. Let's take a simple scenario of Rachel Jefferson. Notice that this scenario does not have a circuit breaker refund as part of it. Rachel Jefferson, single taxpayer, age 77, no dependents. She itemized deductions in 2018. She received a 1099-G from the state of Massachusetts in 2019 for $1,854. The state income tax paid was used on Schedule A rather than the sales tax, the state sales tax, and we're going to use the TaxSlayer online to the TaxSlayer state refund calculator to calculate how much of a refund is taxable. Now we're going to look at the same scenario with the circuit breaker refund as part of the prior year tax return. So again, Rachel Jefferson, age 77, no dependents. She did itemize in 2018, and she received a 1099-G from Massachusetts in 2019 for $1,854 refund, but $1,100 of that was the circuit breaker credit that was paid out to her in 2019. State income tax paid was used on Schedule A and not the general sales tax. And we begin with the Mass Special Circuit Breaker Treatment Worksheet, which we haven't touched on yet. At the top of the Special Circuit Breaker Treatment Worksheet, we have an explanation of when do you need to run this special calculation, when all of the following are true. First of all, taxpayer received a 2018 Massachusetts refund, Form 1099-G. Taxpayer is a homeowner. Taxpayer itemized deductions in 2018 using Schedule A. The taxpayer used real estate taxes on his principal residence as his deduction on his 2018 Schedule A, line 5B. And the taxpayer received a circuit breaker credit on 2018 Massachusetts Form 1, line 44. So if all of those things are true, then they go ahead and they use this worksheet. Otherwise, if you notice what's highlighted in yellow here, if the above special conditions do not apply, use the taxable state refund calculator built into TaxSlayer. So the worksheet then goes on to say, what information do you need? The taxpayer's 2018 federal tax return with its Schedule A and a 2018 Massachusetts return. If those are not available, report the total Massachusetts refund as being taxable. So you need both the 2018 federal return with its Schedule A and also the 2018 Mass return. How do you do the calculation? One, open the Bogart refund calculator. So here is the URL for the Bogart calculator, which we're going to use in conjunction with this worksheet. Fill out all the entries in the 2018 taxpayer information section. So here you can see the beginning of the Bogart calculator, and you can see that we have filled out the 2018 taxpayer section with Rachel's name, the filing status as being single. She's a taxpayer over 65 years old, so we check that box. And we also make sure that the tax year is clearly 2019 and not 2018 or 2017. So here we have the Massachusetts Special Circuit Breaker tax sheet continues on to line 2, where you have A and B, one being the circuit breaker, the other being the income tax. And here is where you manually do the calculations, and then you take the information from these calculations and put them into the Bogart calculator as well. So let's go through this. The circuit breaker, the 2018 circuit breaker amount, line 44, on the 2018 tax return was $1,100. That's the circuit breaker amount that Rachel got on her 2018 tax return. 2018 Mass tax liability, however, was zero. If you look at line 37 on the 2018 Mass tax return, you're going to find that it was a zero tax liability. So therefore, her taxable circuit breaker part of the refund is $1,100. So it then says, enter the taxable circuit breaker part of the refund in the real estate tax refund amount box in the Bogart tool, as well as the taxable circuit breaker portion of refund in the next table. So you're going to take that $1,100, you're going to bring it down to section B and use it there, and you're also going to bring it over to the Bogart tool under real estate tax refund amount. So in section B, income tax, the total 2018 Massachusetts refund, so the 1099-G was written for $1,854, so that's the total refund. The taxable circuit breaker portion from above is $1,100, and the taxable income tax part of the refund is $754. So the $1,100 is attributed to the circuit breaker portion, but the mass income tax portion is $754. So now you've got everything that you need to go on to the Bogart tool. So when you're finished with the Bogart calculator, you simply go into tax layer, you go into the income section and select state tax refund, bring up the state refund worksheet that you see here, and input under bypass state refund worksheet the total that you got from the Bogart tool, $1,119, and then TaxSlayer will take that information and put it in its appropriate place on Rachel's tax return. So just to review, when you deal with one of these situations, you want to confirm that the state income tax refund was only for the preceding year. So if you're working on a 2019 tax return, you want to make sure that 2018 was the preceding year, and that they did, in fact, have an state income tax refund for that year. Otherwise, if it happens to be a 2017 or a 2016, you're going to want to review that prior year return and look and see whether they had itemized or not. Because if they had not itemized, then we could basically ignore the refund that they might have received. If, for instance, if they had received a refund from a 2016 tax return and it was paid to them in 2017 or that kind of thing. Income tax was deducted, state income tax was deducted on their tax return. You have to look at that, whether they had negative taxable income. So there are situations where even though it might be a year prior to 2018, we could still do it because the state income tax refund may not have played a role anyway. So any one of these items on this slide would key us in as to whether we could help them with that prior year tax return. So thanks for devoting your attention and spending time with me today and talking about state and local income tax refunds and how taxable they may or may not be.